Hello, good evening, everyone. Welcome to another Kleiner Masterclass. I'm your host today. My name is Clinton, and today we are going to be talking about five money skills you need. We're going to be talking about five money skills you need before you start Forex or crypto or before even trading altogether. Okay, so you may ask, who is Kleiner? What is Kleiner? What do we do? What are they about? Where are they? And all that. But I would like you to know that Kleino is an ed tech company dedicated to empowering individuals with the knowledge and skills to understand and navigate the world of Web3 and cryptocurrency. The world today is going fully digital, and you need to follow the trend of the digital world. So, what exactly we're here to do is we're here to nurture you right from the foundation and gets you to see the clear picture of what trading, what investments, and what digital currencies are all together in one package. We provide clear,
Hello, ma. Yes, ma.
sorry,
I can learn. Okay, ma. Yes, ma. I'm gonna need.
sorry, Ayo.
Okay. Eh, receipt size nìkan tó kọ síbẹ̀ yẹn. Okay.
Hello. Yeah, sorry about that. So back to Kleino. We provide clear, concise guidance and actionable steps to help learners make informed, smart, and safe decisions in this rapidly evolving digital landscape. We're here to give you the clear guidance from the start, from the beginning, because we're not here to skip any step and make promises or get you all riled up on, yes, start this and get rich quick. This is not a get rich quick scheme. This is Kleinel, and Kleinel is here to help you every step of the way, giving you and informed and helping you informed information and also helping you to make the right decision, right and safe decision. So back on today's topic, five more five money skills you need to know before you start Forex or crypto or before you start trading. These money skills are actually very important before you start investments or trading altogether. So we're going to be diving in. Sorry. You might ask why this class matters. Uh, yeah, you might be curious to know why we're taking a class on, why we're having a session on the five skills you need to know before you start trading. And one of the reasons involve many young people rush into crypto or forex to make money quick or to make quick money. And like I said before, this is not a get rich quick scheme. I'm sorry, can you mute your mic? Okay, thank you. This is not a get rich quick scheme. Digital assets are a lot more, investments are a lot more, trading is a lot more. Because when you take trading has existed before, even before now. It's not just about trading digital assets. Trading don't just come to mind when we talk about digital assets only, because day to day our lives involve trades. You step out of the house, you're taking public transport. It's a trade for a service. You are buying goods from a store. Let's say you want to restock your house. It's a trade on its own. So, and what do traders do actually? Do you think traders just buy goods so they can make do you think traders just buy goods all of a sudden, stock up their shop, and think, okay, since they have bought the goods, they are going to flip all those goods at once? No, they tend to look in long term, building a customer base and continual cash inflow, having something that brings money in continually without stopping. So, another reason why this class matters, scammers often target students and beginners who lack financial knowledge. These five skills are basically the starting points for anyone who is looking into investments or is looking into trading. Without basic money skills, they often lose more than they gain. And this is something that majority of us face today. A lot of people, they've gotten into investments, they've gotten into trading, they are losing more than they are gaining. Some people, few people are even at break even. There is no loss, no gain. They are just in the middle. Learning these skills can help you avoid costly mistakes and emotional trading. Emotional trading is very dangerous. I don't know how many of us have heard of it. Okay, I would define emotional trading as, let's say you you bought you entered the market today, you ended up losing money, and instead of calling it a day, you want to make that money back by every means, by trying to trade in the direction of the market, trade against the direction of the market. And that is basically emotional trading. Every trade you take should go along with your trading plan. Good money habits protect you even when the market is unpredictable. Trading with your plan helps you grow your accounts, because basically when you take a loss and according to your trading plan, that loss is all you should take in a daily trade. If it's less than the loss you need to take in a trade, then no problem. You can trade again. But when it exceeds your maximum loss size, like the way your trading plan is meant to be is you have your target profits and you have your stop losses. So for your stop losses, that is the amount to which price gets against you, the price the amount to which price gets against your trade. Let's say you enter Bitcoin now and you're expecting Bitcoin to go up. Bitcoin right now is in $103,000, and you're expecting Bitcoin to go to let's say 105, and you opened a position at this 103, and it no longer goes in that direction. It no longer goes up to 105. Instead, it goes all the way down to 101. So your stop loss size is where you cut the losses. So for your trading plan, you need to have standard losses, as in standard amounts you are willing to lose, and your you have to have a target. You have to have a targeted profit. So on today's case study, we are going to be looking at Ada. Ada is a 21-year-old university student who joined a crypto group on WhatsApp, excited by profits others were posting. She was excited about profits that others were posting. She took a loan of 50,000 naira to start trading. She had she had no budget, she had no saving, and no real knowledge of crypto. Within 2 weeks, she lost 40,000 naira because of a scam signal group and emotional decisions. That's why you do not trade emotionally. Like, want to carry out revenge trades and all that. She stopped trading and was stuck with a loan for repayments. She stopped trading and stopped with a loan. This is a lot. This is a situation that majority of people also face. In whatever you do not want to borrow money to start investments or to start trading. You want to be able to generate your own money. You want to be able to risk what you can afford to lose. And in this class today, we are going to be touching those skills that are those 5 skills that are really important for anybody investing or anybody trading. So some of the skills, if you would ask me, excuse me, excuse me, some important money skills involve budgeting. Budgeting, when it comes to budgeting, you may ask, what is budgeting? A lot of us know what budgeting is, but in this class, we're going to say budgeting means planning your spending. You need to you need to know the amounts you have, and you have to have like you need to know how much you have, first things first. You need to set targets of what each amount, each naira or each penny in that your money is going to achieve for you. That's basically budgeting. Let's say you have needs, everybody has needs, everybody have wants, but knowing fully well, okay, this money is for these needs. You need to buy fuel for your car, you need to buy food for your house, you need to pay electricity bill, you need to pay water bill, and you need to buy fuel for your generator. Or maybe you are saving towards getting solar solar panels for your house, an inverter. What do you do then? You don't just jump all at once. You make budgets, and budgets help you to know how much you can afford to trade or invest without actually knowing, okay, by the time I've settled all my needs, how much do I have left? Because it's not money you want to use to settle needs that you carry and go and put inside investments, or you carry and go and start trading. That is not how it works. You need to you need to have all these things written down, and you start by writing your income, what you earn, your expenses, what you spend, and separate your needs from your wants. That those are the 3 first steps involved in budgeting. You have to know your income, your expenses, and you need to separate your needs from your wants. And there are also there are very numerous types of budgeting, but we're going to be looking at a few today. Zero-based budgeting. Zero-based budgeting. I know this might sound new, but in this kind of budgeting, every single naira you earn must have a purpose. Every single naira you earn must have a purpose. The goal is to ensure that your income minus expenses, eq- your income equals to your income is equal to zero at the end of your income minus expenses. That is every naira you have has a purpose. So by the end of the day, by the time you have shared your money across all your needs, all your wants, and each naira is accountable for, each naira is accountable for, because there won't just be money sitting somewhere and you be looking at it, it's not serving anything. That's the model behind the zero-based budgeting. We also have the reverse budget. The reverse budget, puts this method puts your future first by focusing on pay yourself first. It's super flexible. Instead of worrying about monthly expenses, the main focus is on what truly matters. For example, you could invest 20% of your income and then live on whatever it is that is left of it. That's the model behind this reverse budgets, the reverse budget kind of budgeting. Okay, then the next we have the cash envelope method. We're not going to be looking much into that, but this also involves each of the budgeting types, each type of budgeting. The main goal behind it is for you to plan out your expenses, nothing more. Plan out your expenses, plan out the money you will need to save, so you know how much, okay, yes, by the time all these things are settled, you know how much you have for trading, you know how much you have for investing. And by the time you do this, you're not going to be you're not going to be scared. It's going to reduce your fear because in the market there are two emotions that control traders. We have the fear, we have fear and we have greed. So fear controls a lot of traders, greed controls a lot of traders. You're either scared to enter a trade or you're either too greedy to leave the trade, too greedy to take profit and leave the trade, or you're either afraid of uh I'm already in loss. Or okay, I think there should be a third. I think hope, 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 fear, and greed. By the time you see an investment now, instead of setting realistic targets, you start hoping. You start hoping that okay, more will come out and all that. But mainly, hope falls under greed in this case because you've seen profits, you've seen money because in trading and investment, you have to set realistic targets. By the time you see that okay, this thing has gotten to this place where you targeted, you take your money and leave. There is no hoping for something you do not know about, especially something you do not have any control about, and the market is filled with uncertainties. So next we have the 50-40-10 aggressive wealth budgets. And I think there's also a 50, 50-30-20 aggressive wealth budgets too. And we also have the cash only spending plan. In this cash only spending plan, in this kind of budgeting, your all your expenses, you're going to withdraw all your income and put the money into different envelopes. Like everything, each envelope will have a purpose, and the cash inside is meant for that purpose. You are not adding to it, you are not taking from it. That's how the cash only spending plan goes. Next skill, looking at the first skill was budgeting. Now we're moving on to the next skill, which is savings. Savings. Saving is known as, like we term it, the build your safety nets. Basically, savings help you build your safety nets, something to fall back to. It's not every time that it's going to be rosy. A lot of people have it that way. Sometimes you just need, by the time your entire money, your entire income has been elapsed for that month, and you have nothing else to fall back to, it's quite scary. So savings help you have something to fall back to. And you don't trade with money you cannot afford to lose. Savings is not your trading money. That's where budgeting comes in. Always budget for your savings first. You need to have a savings. It's not from your savings that it's not everything in your savings you carry to go and trade. Basically, your savings, but your mind will be a whole lot calmer knowing that, okay, yes, I have money saved somewhere. Building savings before you start trading, you need to start building your savings before you start trading, not after you start trading, not when you start trading. Before you start trading. You can start by maybe saving 1,000 naira every day. And if you notice nowadays, there are a lot of platforms that help you save actually. They like deduct, like we have Carrywise. You could set up a savings plan whereby they deduct money daily from your account. And you'll be surprised by the end of the year if you save 1,000 naira every day for 365 days as a worker. By the end of the year, you have 365,000 naira. So savings is a very important skill. Saving is a very important skill that is needed before you start trading. It helps when you are saving for emergencies, you're saving for future plans, you're saving for trading capital. Like sometimes your trading capital can actually come out from savings. Let's say, okay, God forbid you are a worker, you but you got laid off and you have no means of income, but then you see an opportunity for financial breakthrough in trading. Where do you get money from if not from money you've been piling up? So this is why it's actually important to start saving before you start trading. Uh, and on our third point, we have self-control. Self-control with money. Self-control with money is very important. Self-control helps you to say no to impulsive spending. And also in trading, it helps you stick to your plan. Each trader is meant to have a trading plan. Each investor is meant to have a plan, and that is how it works. By the time you stop trading according to your plan, you you deviate from your plan. Let's say your this thing loss size that is meant to be $5 per trade, you start deviating by not putting your stop loss. Instead, you are waiting for your account to be liquidated because you are scared that okay, if price stop you out now, it might not go in your direction. We don't do that when trading here at Final. What we do is you you make sure you don't trade what you don't know. You trade what you know, what you see, and you execute it. And how do you do this exactly? As a sport analyst, you you or a forex analyst, you're not just jumping into trades. You have what you want to see in the markets, what you want to see in the charts, and you have how you execute it. And all those are found inside your trading plan. And this trading plan is meant to teach you self-control with money. It's meant to actually help you from trading impulsively and from doing revenge trading. So self-control with money, whether it applies on a very broad scale apart from trading and investments, even in real life, impulsive spending, a lot of things that are not necessary for us to buy with our money, we end up buying it and questioning ourselves after buying it. Whereas if you had a plan, maybe the plan is for an investor, you would have a plan whereby, okay, you have a certain amount of money in your account for savings. By the time it passed this certain percentage, the remaining money inside should be used for investments. If you have that kind of plan, you are actually cutting impulsive spending because you know that, okay, this money now, instead of me to just use it and buy, okay, I want ice cream. Immediately, I remove the money and go and buy ice cream when it's not something I need right now. It was just a want, like maybe I'm watching it on the TV and I just saw it and I bought it. A lot of money should actually be targeted and should be, as in you should be able to give this thing give accounts for every penny you spend. I'm not saying that we shouldn't settle our wants as well as our needs. I'm saying that decisions shouldn't just be made like this, like without planning for it, because that's what budgeting is about. Every decision you make should be planned for, and budgeting, saving, and self control with money. These three are the important skills we have touched so far. Moving on to, okay, in trading, it helps you to stick to your plan, avoid fear of missing out. That is part of the like impulsive way people trade because you see price going up You feel like, I can make money from this thing, or I'll just, okay, I'll open a long position in futures to follow the markets. You probably don't know, okay, no, this person is an experienced trader person, but he has fear of missing out. Okay, he opens a position to follow the market. You are literally aware that this market has reached a high. And what do you do as a trader? You sell highs, you buy lows. And as basic as that is, a lot of people don't do that. A lot of people are scared of missing out. Okay, you see price going past your resistance, but you still want to buy it. Those are impulses. That's impulses controlled by one of the emotions in the market, which is fear. Don't chase hype or risky signals. Set clear rules for yourself and follow them. That's what your plan should be all about. Set a certain risks reward ratio, 1:3, 1:4, however it goes for you. Everything should be set clear in your trading plan. And number five, we have our fifth skill. We have research. Among the five money skills you need before you start trading crypto, trading Forex markets, or even investing in stocks or shares. You have to do your research. Don't just follow the crowd. A lot of times you get to find that there have been massive opportunities that have been missed, which you discovered, but why? You decided to leave your your analysis, which you have done, and you see someone else post, or plenty people are talking about something on the space, you decide to follow them, then end up biting your fingers. Why? Because what you wanted to do initially played out fine. Then the current position you are in is going completely wrong, going against you. So you tend to be like, "Ah, this is what they actually mean by don't follow the crowd. Always learn before you invest. You need to know what you're doing. You need to be solid in knowledge about what you're doing. It's not just to open positions. It's not just to, okay, the market is going up, follow it up, market is going down, follow it down. No, you need to know actually what you're doing. You need to understand what you're trading. Ask questions, read, watch videos, join learning groups. And this is exactly what Kleinel is here for you. We're here to listen to your questions. We're here to answer your questions. We're here to provide resources for you to read and for you to watch, and also have one-on-one sessions whenever the time is convenient with any of our community members. So know the difference between real education and online scams. And if it sounds too good to be true, it probably is. Like hearing outrageous things, like when it comes to Ponzi schemes, I hear crazy things. And the funny thing about Ponzi schemes is a pyramid system favors the early users, and you hopping in. Sometimes you don't even get to know whether you're early or you're late. You don't even get to know whether you're early or you're late in it. So, and you end up losing money. But it's quite obvious actually when you see Ponzi schemes, because they're always offering ridiculous APYs, annual percentage yield, or APRs, annual percentage returns. And like we had previously, we had CBEX offering over 100% return or so after a month. And when you come and look at it, even your mutual funds, even your S&P 500, they don't even offer that amount in a year. And what's your S&P 500? These are like the top 500 companies in the United States, and they're not even offering you 100% return after a year. talk less of these guys now offering you 100% return after a month or two. So you have to know these things. And how else can you know these things other than research? A lot of a lot of these guys follow the same pattern, and the only way to actually detect this pattern is through your research. Okay, MMM came. What do they have in common? Okay, what's this restriction of not being able to access my money when I want it? There are a lot of questions you should ask, and these questions can be answered with a lot of research. Okay, so number five, okay, yeah, and remember, if it sounds too good to be true, it probably is. So, our fifth skill, after looking at budgeting, saving, self control with money, and research, which is going to save you a whole lot and is going to build your knowledge and build your confidence in the market, research. Then moving on to the fifth skill, which is risk management. Risk management is another foundation people need to build on. And risk management helps you protect your capital. Trading is not about winning every time, it's about staying in the game. A lot of people rather chase impact over the consistency. You want a big win, then you take numerous of losses. Like you win out of 10 trades, you win two, or you win one safe, and you lose the remaining nine. And when you look at it that way, you are consistently in loss because those nine times you lost and that one time you won, they are completely not balanced. If you win five trades and you lose five trades, you would still be in profits. And this is what risk management tells you, that you can't win all, but you can be consistently winning. It's about staying in the game. Winning five out of 10 trades, it's not bad. You're 50% profitable. And when you look at it, when you keep on going, you notice your profitability rate is actually increasing. Maybe you were winning five out of 10 trades before, now you're winning six, you're winning seven. And before you know it, okay, you have a threshold you can't cross. Like, okay, I always win seven trades out of 10 trades. I am very much profitable, but you're aiming to be among the 100% because everybody is aiming to be among the best. But in a game of probability, in a game of uh uncertainties in the markets, whereby, because if it was that simple, everybody will have money. The market reads emotions, the candlesticks you see, the impulsive candlesticks, the the candlesticks without impulse, that undecisive candlesticks. Everything you see on your screen as an analyst is emotions, different traders' emotions, put together in one candlestick. So risk management, as we're discussing, it helps you it helps you to set realistic targets and helps you to set saving saving losses. Like it helps you to cut your losses. It helps you never to invest all your money in one trade. You should never do that. You should never put all your eggs in one basket, like people say. Stop loss limits how you lose money, and take profit locks in your gains. If you're not aware with the terms I've been using, stop losses or take profits. Okay, so with small amounts while you are still learning, it is better you have a plan, and that plan can help you manage your risk accordingly. You need to know how much you are investing, and you need to know from this investment you are making, how much are you willing to risk? How much are you willing to lose? You need to be able to afford what you are willing to lose. It should not be the other way around. You need to have, from all these five skills we've discussed, you need to have each and every one of them in your pocket, you need to know how to budget, which means planning for your expenses, planning, planning everything you do, every action you take. Then you need to know how to save because it is important to start saving before you start trading or making investments. Because what else do you invest? A lot of people, when they get into trading or investment, they're usually like they have money sitting in their accounts, and a lot of people want their money to work for them. How else do they get that money sitting in their account if not saving? Because if they are not saving, they are doing something impulsively. So this is where saving comes in because saving, budgeting, you need to first budget your savings is the first step of budgeting. So budgeting, savings, self-control with money, self-control with money will help you control your emotions in the markets and also control your day-to-day spending. Then the fourth, research. Research is very important. Research, aside from there are times in the crypto markets where we come together, we bring all this together. Aside from technical analysis, you might know, you also need to know how to research with various tools. We have CoinGecko, CoinMarketCap, even down to for stocks, we have Polygon.io where you see different stocks listed or Investopedia. So you know what you are looking for. You are looking for real life application, real world applications, and all that. And all these are going to be covered in our mentorship program. So and the before we round this up, risk management comes in last, whereby okay, now you have the first four out of five. Because once you have the first four, then you want to start implementing. Okay, then comes your risk management. Okay, I budgeted this amount and saved this amount for trading. Okay, you were able to do this through self-control with money. Now you've done your research on what you want to invest in, then risk management comes in. How much am I willing how much am I willing or how much can I afford to invest in this project, in this thing that I have found? So, all these five skills put together, each and every one of them are important to a trader or investor, sorry. So, moving on to okay, the Securities and Exchange Commission of Nigeria is the foremost government governmental agency mandated to regulate the investment market to protect investors and ensure a fair and efficient capital market. This is the Nigerian Securities of Exchanges, and they released an ISA Act 2025, which can be read at this link here. And it's in this ISA Act, there was a recognition of digital assets. Recently, the Security of Exchanges in Nigeria recently made digital cryptocurrency a legal tender. And this kills all doubts that we've had about cryptocurrency or digital currencies in general, which some questions being asked, is it supported by the government? Is the government approved? Now, this ISA Act 2025 has come to clear all that doubts and all that questioning of the air. Digital currencies are full-time legal in Nigeria. The six-step strategy that will help you succeed in trading digital assets. Now that we know that digital assets are legal and everyone can possess digital assets. Identify the path for you, which is the first of all the steps. Identifying the path for you. Do you want to trade? Do you want to invest? Do you want to earn passively? You need to identify which part exactly is for you. Are you wanting to trade the crypto markets, the forex markets, or the stock markets, or you want to trade all, you need to know which parts you actually want to fall, which category you want to fall under. We, in our course, we have the spot analyst course and the forex analyst course. We do not call it trader course because you need to know how to analyze these markets first before you start trading. So learn after identifying the paths which you want to take, you need to learn the skills for that paths. And if you want to be a crypto trader, you need to become a sport analyst. And there are various skills a sport analyst have. You want to trade the forex market, you need to become a forex. You need to gain the skills of a forex analyst and also the list of skills, the educational content, a lot of them are presented. Then practice simulations. When practicing simulations, this is when you, after identifying the parts, learning the skills, whether sports or forex, whether crypto or forex, or even stock, you practice simulations. And simulations are practice on the platforms we have. For Forex, we have Meta 5, Meta 4, or through your broker, which could be Deriv or XNext. Or for crypto, we have Binance and other exchanges and other decentralized wallets like Trust wallets. And you'll find that there are actually demo accounts with dummy currencies, which can be used to actually purchase dummy currencies. They are not real money, but they are fake money actually put in there to help you practice. Like for forex traders now, if you enter your Meta 5, there's a part for demo where you activate your demo account, and sometimes you even get to choose the amount of demo dummy currencies you want. We call them faucets. You get to choose the amount you want, then you start trading. That is you practicing the simulations, practicing what you have learned, practicing the skill you have acquired. But majority of the time, a lot of people lose lose focus on the scope here. By the time you are practicing, if you cannot apply risk management and all those five skills from you have learned previously, which involve the budgeting, saving, um, managing your impulses, and research and risk management. If you can't apply that to practicing with dummy currencies, I don't think that won't be able to work. That's why majority of the times traders actually fail in executing proper trades and end up blowing their real, real account. Your real account is funded with actual money that you can spend in real life. So while practicing simulations, it's not just to execute the trades, it's also to follow the skills that are required. You need to have risk management when practicing simulations. Yes, you have $100,000 demo accounts. It doesn't mean you will now be opening any lot size or entering any trade, and because it's actually going in that direction, you feel okay, yes, you know how to trade without actually following a plan. So while practicing simulations, you also need to apply proper risk management by knowing what you're doing. Next, you gain trade psychology and risk mastery. How do you do this? How do you gain trading psychology and risk mastery? You gain this by one-on-one sessions with experts. Excuse me. You gain trading psychology and risk mastery when you trade one-on-one, which is a feature which is a feature available in our mentorship program, whereby you we trade together and you get to see how these trades are not only executed, but how we implement them, how what what step we actually take before taking these trades, how we follow our plan in our risk management, how we apply proper risk management to each trade. Then the next way is through live trading analysis. In live trading analysis now, we this is where we are immersed in the charts and we analyze the market's condition together, not just one person's opinion. You analyze, you tell me what you see, I tell you what I see. We try to we try to join our ideas, and because not only one person can see it all. I might be seeing an opportunity in GBP USD today. You might be seeing an opportunity in USD JPY. And what you're saying in USD JPY follows my risk management plan also. I might decide, okay, instead of putting all my capital for today in just this one trade, we can split it. We can split in mine, we can split in yours, trade GBP USD, trade USD JPY. And this help us rub minds and learn from each other because trading is a continuous learning process because there's nothing the market hasn't seen, or there's nothing the market clearly hasn't seen. Market has seen upsides and downsides. It hasn't seen times where there are consolidation means when market is just ranging in one position. So the market is familiar with a lot of tactics. So therefore we actually need there are times when you need to get opinions with your fellow traders. Navigating financial investments. Then lastly, we have mentorship. Mentorship is very important. Mentorship will prevent you from making a whole lot of mistakes, a whole lot of mistakes. Then next, we have networking and portfolio. Okay, networking and portfolio. Networking when you tend to meet other traders because there are different strategies in trading and not one person can actually know all the strategies because sometimes some people are stuck doing their research and they get a breakthrough. You now don't know that breakthrough, but when you network, you get to rub minds with people in the same field with you, and you get to see opportunities where you've not seen it before. So, excuse me. So, after going through these steps of identifying the parts, learn the skill, practice simulations, gain trade psychology and risk mastery, networking, and building your portfolio, you become an expert. And this is a full roadmap for a crypto trader, a stock investor, and a forex market trader. This is the full cycle. And moving on, who is a forex analyst? You might be asking. You might be curious because I've used this word before. I've said a lot about it. So now, a forex analyst is like a weather forecaster, but for currency markets. Their job is to study trends, news, and data to predict how currency prices might change. And this that exactly is what you need to know about who a forex trader is. A forex trader, their job is to study the market trends. They follow news coming from each country. Like when by the time you have pairs, currency pairs you trade, let's say you are very familiar with the USD, GBP or GBP USD, you'd want to follow news and trends and patterns of everything that goes on between the United States and Great Britain. Studies the market, they check USD related currency pairs like Euro, USD, and GBP USD to see price movement. Like we said, the trend of the market. A forex trader uses technical analysis. A forex analyst, a forex analyst, mind me, uses technical analysis. Looking at charts, they spot a pattern showing USD gaining strength or GBP gaining strength. It could be any of them, but always go with your analysis. Predicts an opportunity. They forecast that USD will rise against weaker currencies and advise traders or trade themselves. They also trade themselves. They recommend selling opportunities or buying opportunities. And that is exactly who a Forex analyst is. Now, the skills required to be a Forex analyst, you need to know the introduction to Forex trading. You need to have the core trading concepts. You need to know Meta 4, Meta 5 integration and navigation, technical and fundamental and sentimental analysis, support and resistance levels, candlesticks and chart patterns, leverage, lot size and spread, risk management strategies. Risk management is really important as well as the rest. But firstly, you need to know risk management before you even hop into any trade, which when learning at Kleiner. So then you need to know advanced trading strategies, Fibonacci levels, pivot points, and Elliott waves. This number 10 is focusing on indicators. We are going to improve your indicator game in the market. Indicate you can't only use indicators to trade, but these indicators can also increase the your confluence and increase your conviction actually. Time frames and confluence, like I just mentioned, how to generate trading signals. These are the skills which you are going to be getting if when you register for our forest analyst course. And you're also going to familiarize yourself with these tools, Meta 4, Meta 5, and Trading View, as well as Mexi, Forex Factory, and many more. This this Forex analyst course comprises of 2 months training, 1 month for learning, and 1 month mentorship, 1 month one-on-one. When we speak about mentorship in Kleinel, at Kleinel here, we're not talking about you send me a message, I reply. We're talking about interacting one-on-one sessions whereby, okay, you found this on your screen, you'd like to show me. Final makes time available for each community member. We make that time out for us to review things together to get to understand so there will be no confusion because whether you like it or not, there are people who don't learn with the crowd and people who would prefer to learn in a private and would actually learn faster in a one-on-one session. And that's why Kleiner has made this 1 month mentorship as part of the 2 months intense training. And these classes are going to be holding on Saturdays and Sundays. Saturdays by 11 a.m. to 2 p.m. West African time, and Sundays by 3 p.m. to 6 p.m. West African time. So next we have who is a spot analyst. Who is a spot analyst? A spot crypto analyst is like a gold trader who studies market trends to determine when to buy and sell physical gold. But instead of gold, they analyze cryptocurrencies like Bitcoin, Ethereum, Solana, and many more in spot markets where transactions happens instantly at current market prices. As a spot analyst, you're going to find out a whole lot about the crypto space. We coined the word spot instead of crypto analyst because a whole lot of us would like to make investments the in these digital currencies that I imagine. And we've come to see it that in the sports markets, you are actually an investor. So Sports analyst course is going to cover a whole lot, not just cryptocurrencies, but also stocks. And like you can see, a sports analyst does market research, they study price trend, activities, and news affecting crypto assets, digital assets, even and they do technical analysis. They analyze charts, patterns, and indicators to predict price movements. Fundamental analysis, they examine factors like adoption rates, regulations, and project updates. Risk management have appeared once again to show you that you cannot invest or trade without a proper plan, which is well versed with risk management. So, moving on, the skills you are going to gain when you register for our spot analyst course: introduction to spot trading on centralized exchanges, trading on decentralized exchanges, which we have spoken about. We have, when it comes to crypto, we have crypto on centralized and decentralized exchanges. Then we move on to staking. Staking, what exactly is staking? You might be curious. Uh, Staking now, you've heard of proof of stake, you've heard of proof of work. What does staking mean? What happens in staking? All these will be uncovered in the spot analyst course. Then we have yield finance, we have narratives and research, risk management and trading, risks to reward ratios and position sizing. Risks to reward ratios and position sizing. This particular topic, this particular skill which you are going to gain is going to serve you a long time, because a lot of times people ask, okay, what if I don't have money? But that's the thing, you don't need to have the exact money to start carrying out trades, because if you fully know what the crypto leverage system is, what your position sizing is, you realize that so much can be achieved with so little, especially once you have the knowledge of a spot analyst. So, risks to reward. Okay, I've covered that. Trading stocks versus trading crypto. Are they the same thing? You get to find out. Trading stocks on traditional markets. And the tools which we'll be using to gain these skills as a sports analyst involve your CoinGecko, your Dex Screener, your centralized exchange. One example, we have Binance. Then we have XNext, CoinMarketCap, and Bamboo. Bamboo, the platform which you'll be using to trade your stocks. And finding out more about stocks. Now, this program also is going to be a 2 months. It's going to be 2 months of intensive training, 1 month of learning, 1 month of mentorship. Like we spoke on mentorship before. This class is going to be holding on Saturdays and Sundays, 11 a.m. to 2 p.m. West African time, and Sundays, 3 p.m. to 6 p.m. West African time. How we position for success here at Kleiner. At Kleiner, we have a formula for success, and this is our TS plus TPRM. You might ask, this involves adding up everything you've learned, your trading, your technical skills, and added together with your your trading psychology multiplied with your risk management. Risk management is very important, because if you do not know risk management, then you aren't trading, you're gambling. That's the way I see it. You're not here to be a trader or an investor. You're just here because you have excess money to bet against the odds repeatedly. So technical skills, trading psychology, and risk management all add together guarantees you success. And this is what we're after here at Kleino, your success in the markets. Additional services, we have our one-on-one sessions with experts, which we'll be providing during the course of the mentorship program in June. Live trading analysis, we get to do analysis together and trade together. Uh, Navigating financial investments, we get to do research together and we get to familiarize with different options, get to know the options we have. Uh, the market rundown, we do top-down analysis involving everything in the markets. And alumni community. You have a community packed filled with traders during this mentorship program. You have when you have that suitable learning environment where everybody can communicate, where you get to see what your fellow students or your fellow members are doing. I think that alone is huge motivation for a lot of people. So join our next cohort, which starts at June 6th. Be a part of the first 20 people to register and get 20% off. Yes, Kleiner is giving 20% off to people, the first 20 people to register the course, and you'll be paying a discounted amount of 40,000 naira for the Forex analyst or the spot analyst course. To to make your payment, you have to navigate our site, which my colleague will drop. Okay. Uh, Sorry about that. Yeah. So you get to be part of the Kleino community, and this right here is where you find our course, whether the sports analyst or the forex analyst course. This is the website where here you get to chat with us. You can chat with us, send us a message. Maybe you have a complaint, or maybe you have a special request. You want to find out more. You just hit this chat with Lionel, and our team members are readily available at every time to answer and process your request. Then you can use this to access our brochures. Our brochures, you get to see that everything the sports analyst is about, everything the forex analyst course is also about. And you can also save the PDFs. And right here is where you upload your receipts after making payments. Here you can visit the store. Okay. When you visit the store, you see this where we have two courses. We have the sport analyst and we have the forex analyst course right beside each other at a discounted rate for the first 20 people. Okay. Uh, so yeah, that will be all for today. Thank you so much for joining our masterclass. Thank you for joining, and we hope to see you next time. Wait, okay. I don't know if anyone has any questions. Please, if you have any questions, you can indicate by raising up your hand. All right, if no questions, that'll be all for today. Thank you.